How's it going, everybody? JT here on behalf of the Ethereum Daily General Discussion on Reddit, as well as the EV Mavericks DAO, the community that we all love out there, all the places on X and Farcaster. Thank you to the EV Mavericks for letting us host this on their Discord. If you want to stop by, you can just look up the EV Mavericks Discord. It's available on our X channel at EV Mavericks and at dailydoots.com. Give us a thumbs up, smash a bell if you're watching this on Twitch, YouTube, X, or your mom's basement. That'd be great. Give her a thumbs up too from me. All right, I've got Charles Allen here. Charles, say hello to the world, my friend. Thank you for joining.
Yeah, no, thank you for having me. It's great to be here.
It's wonderful to meet you. I had found you. I believe I was watching another podcast, and you've got a ETH Treasury thing going on, but you just have a very long history in crypto. And I always like to ask the guests a little bit of the origin story. Before all of that, okay, what were you interested in? What field were you in before you started this adventure over 10 years ago?
So I started my career as a mechanical engineer. I worked in the compound semiconductor industry, making tunable lasers. Then the internet bubble burst, so I moved out to California, moved back to New York. There were no jobs, and it was around September 11th, so I decided that I would sit out the bad market, got my MBA, and I got in investment banking for close to 10 years, helping small and mid-cap companies raise capital, go public. So I worked on like the Jamba Juice deal, the American Apparel deal. And it was interesting, a lot of smaller companies as well. And it was around, I think, 2013, I wanted to get out of banking. I wanted to get back to tech, but I didn't want to lose, almost 10 years of investment banking experience. And so I kind of looked at like, what's a good bridge? And so I was looking for a tech company in the space that was looking to go public, where I could help be that bridge, understand the public markets. And it was just, frankly, dumb luck. Term sheet landed on my desk for this company, Bitcoin Shop, to go public via reverse merger. This is in 2013. I knew nothing about Bitcoin at the time. I knew nothing about crypto. I mean, this is a long time ago.
Whoa.
So not many people.
Wait, hold the phone. You got into crypto as a result of helping a reverse merger of a company. So that's like, it was an institution which was kind of different than the cypherpunk ideals of the way most people find out about Bitcoin. It came across your desk in a professional sense. That's interesting.
Yeah, I got this term sheet, and they were going to, some investors were going to write a check, and I looked at it. It took me about half an hour. I said, there's like probably two people. I was living in D.C. at the time, probably two people in Washington, D.C. that actually, including myself, really had knowledge on reverse mergers and like how to get these deals done. And so it was a favor. I took the term sheet, tore it apart in about half an hour, and said, hey, this is how I'd respond. Go give it to your buddies. And a couple days later, I was having lunch with them. That's when I learned about Bitcoin. The business model kind of sucked, to be honest. It was an e-commerce site, but
Gotcha.
I kind of went on, read the white paper, learned about it, and then got involved in the company, took it public, got it public in about 4 weeks, and we became the first public company in the cryptocurrency space. This is in February 2014.
So later that same year, there was maybe it was that same year or just after that in 2015, a little crowd sale eventually happened for this thing called Ethereum. How early to Ethereum were you after, getting into the Bitcoin space?
So we started mining Bitcoin at the end of 2014 and kind of got away from e-commerce. We had made some investments in other private companies, which was really helpful. We got to meet a lot of the leaders in the space. A lot of those CEOs have gone on to be very successful. And then I think it was 2015, we started mining Ethereum, right? Because it was still proof of work. But it was not something we could do at scale. It was more like a side project. We were buying these Bitcoin miners from Spinduli, Bitmain, and we had some Quinteras. And we're like, we should get into this Ethereum thing. I think it cost us $250 to mine an ETH at the time, and they were selling for like $5-6. But the challenge was it was a GPU, and you couldn't just go buy like 50 of these machines and plug them in. You were literally buying graphics cards and sticking them into motherboards, and can you get two? I mean, the whole thing was a disaster. It wasn't scalable.
It was hard.
There really was no it was really hard. And then same thing, even in 2017, like the whole proof of work, concept with GPUs is very hard because they're just not made for that. Nobody was making GPUs that could do it. And then obviously when Ethereum went to proof of stake, everybody that was around, the end of 2020, everyone that had bought all these GPUs and tried to build out mining operations for Ethereum on an industrial scale, they got destroyed. And I remember talking to a bunch of these guys, like, well, we'll sell it to the other chains, or it'll be what was the ETH Classic or whatever they called that thing. I'm like, this is done. Like you can sell your GPUs to gamers while you can.
My origin story is pretty similar to yours. My brother's technical know-how. I'm the Reddit guy. I was listening to the news, and my accountant had money. And I said, we need $12,000, and we're going to go do this mining thing. And literally, Charles, we had laundry baskets, they have the holes going through them. And I had dowel rods going through them to hold up the GPUs over the motherboards with the cables hanging down. Like, you're right. It was kind of a mess, but it worked out. He had access to pretty cheap electricity, but yeah, to your point, it was time to sell those graphics cards to gamers that needed them more than we did after the switch over to proof of stake. That's fantastic. So currently, we'll zoom all the way to the present. What are the offerings for BTCS? Let's talk about what BTCS started out. We kind of understand where are we at now. What are we doing?
So, I mean, there's limits to what I can say. We'll have more news. We're going to have our quarterly report out next week, so there'll be some more information there. But essentially, we're an Ethereum blockchain infrastructure company and beyond. So what that means is we have right now 2 business lines that we've put out there. One is node ops, so we actually run validator nodes for Ethereum's blockchain. We do that in 2 ways. We run our own solo nodes, so we don't go to like a Galaxy Digital or a Kiln or a Figment or one of these third-party providers. So we custody our own crypto. We run solo nodes. We also run nodes for Rocket Pool, which is a liquid staking protocol, which allows us to get, I think it's anywhere between 30 and 40% more rewards for the staking because we get a piece of the commission that the liquid stakers pay. So that's on the node op side. We're also a block builder. So if you're familiar with MEV or maximum extractable value, basically how blocks end up on chain, we account for anywhere from 1 to 3% of all transactions on Ethereum with our block builder. So obviously it's small, but it's in the grand scheme of things, it's relatively big, and that's the biggest driver of revenue in our last quarter. One thing we're working on that we've talked about on X, so I can kind of talk about it here, but very vaguely, is other ways we can generate revenue, scalable high margin revenue within the Ethereum ecosystem beyond just the node ops and the Builder Plus, and ways in which we can vertically integrate our operations on those 2 things to make us better. So that's kind of our end goal, is drive scalable revenue, high margin scalable revenue that's going to increase our ETH holdings without diluting our shareholders.
Little fun fact: the Rocket Pool School videos that you may have seen on their YouTube channel. I had a group of EV Mavericks and myself. We produced the videos documenting how to set up nodes on Rocket Pool once upon a time. They're dated now, but yeah, that's small world. Rocket Pool is awesome. Big shout out.
I'm going to integrate with that team. So
yeah. Well, this is really good. So yeah, a lot going on. I remember watching an older video of you with an interview, maybe with Whack Whack Attack from Rocket Fuel, and at that time, I think you guys only had around 10,000 or 14,000 ETH at the time.
Yeah,
that's gone up considerably. You guys have kind of hockey sticked in the past few months. Tell us about it.
Yeah, so we've been around forever, 11 years public, and you got to be prepared when the market goes. And the market went pretty hard this summer. Our stock price ran up. We were prepared, and so we've in Q3 we've raised over $200 million.
Congrats!
So we jumped from it's pretty good. I think the average price is like around 530 on the ATM. We've also, which is really great if you look at. I mean, that's not, it's publicly disclosed, but it's not in. It'll be in the Q3 report. And with those proceeds from the ATM, about 140 million was on the ATM. We've purchased Ethereum and deployed it. We've also, I think we're the only public company doing this. We're using Aave as a way to access low cost of capital. So we've got north of 50 million borrowed on Aave and USDT. We've taken that, bought ETH. So we've substantially increased our Ethereum per share compared to many of the others in the space. And then we're active in the DeFi space. So it's been Q3 has been a great ride. I mean, it's literally 80% of all the capital we've raised in the last 11 years was in the third quarter of this year.
As we look at the institutionalization, what's the word? Institutions purchasing ETH and holding it in treasuries. I think the thing that a lot of Ethereum maximalists are like, that's good and all, but we actually want treasuries that are going to be actually using DeFi and tools that Ethereum provides outside of the normal TradFi space. And it sounds like when you guys are actually using protocols like Aave and such to actually work the grease into the gears a bit, that's a win-win for the future. I think it's proof pudding that this stuff works for everybody.
No, I couldn't agree more. And one of the things I look at is there's all these Ethereum digital asset treasury companies coming to market. And I don't really like to stick us in that bucket because we have a lot of operations that I think will really drive the alpha in our stock, right? We're a block builder, we're a node operator, and we're getting into other areas of DeFi. But if billions and billions of capital flows in, I really hope these other entities go out and build versus just hoodle it and give it to someone else, to a third party provider to stake it and take a fee. And that's something I think we make a big effort to do. That's why we run our own solo nodes. We run nodes for Rocket Pool. We're a relay. We're a builder. We're actively participating in the DeFi space. So we're actually helping the decentralization of the network by participating in the way we do. And I think it not only benefits the Ethereum ecosystem, but it also benefits our shareholders. So I think that's kind of something that's pretty unique about us as a company.
Yeah, indeed. It's really nice to see, in fact, because I feel like a lot of these other companies are just kind of one-trick ponies. You guys are spreading out your portfolio and your risk, and I think it becomes its own best education for potential investors. That it's like a self-licking ice cream cone of proof that, hey, you can actually use this entire ecosystem to do far more than what everything's been going on in the last 100 years in the financial market. So I think it's its own best teacher. So yeah, hats off to you guys. I'm interviewing Charles Allen for btcs.com. You can reach out to him. He's also on X. We really appreciate Charles stopping by today. I want to make sure I get some questions from the community. And in fact, if you've got questions, I believe the way this works, you can type them in on Twitch, you can type them in on YouTube, or you can just stop by the EV Mavericks Discord, join the stage. We got a channel called the Doots Podcast Chat. If you got any questions you want to bark out here, we will get them answered for you. Or if you simply want to jump on stage and ask Charles yourself, you certainly can. Time is limited, so don't be late. So I do want to ask, will stablecoins, this is from a Redditor, will stablecoins become a way for the U.S., do you believe, to retain its status as kind of like the currency of the world? Do you think that the stablecoin explosion we've seen and the regulatory environment is going to help seal that in, or what are your thoughts?
100%. And what I look at at a high level right now, I think the U.S. dollar is around ballpark 25% of global GDP. It's like 60+% of all financial transactions, and we've got a debt problem. So what's the oldest trick in the book to get out of debt is to basically increase the money supply. And if you do that, you haven't really gotten out of debt, but you've made the debt that's out there less valuable. And so if you look at what the administration's done, they've pushed through the Genius Act, right? So it went through Congress and the Senate, and now there's rules of the road if you want to launch a stablecoin. And there's a lot of reasons why companies would want to launch a stablecoin, and I think 66% of all stablecoins are built on Ethereum, so it's a huge win in terms of the killer app for But for the U.S. government, if you want to export the dollar and have it move, have more demand. Well, you can't just supply more unless you have the demand side of the equation. So how do you get the demand side of the equation fixed? Well, you remove friction, right? Banks operate, 5 days a week. You try to send, you want to send, unless you're doing it online, but even if you send a wire on a Friday, it's, if it's after the wire cutoff, it's not going out till Monday. Crypto's 24/7. And so if you can tokenize the US dollar, and I think you can tokenize lots of other real world assets, but if you tokenize those and export them so that the dollar can move frictionless around the world at a faster pace, it solves a lot of problems for the country. And there's a lot of companies that want to do that, right? If you're Amazon, why wouldn't you want your own dollar, right? You eliminate billions and billions of dollars of credit card fees over time, and you then lock people into your ecosystem to some extent. You can add rewards. It's really a remarkable thing, and that's just the tip of the iceberg, right? I mean, I think stablecoins are probably the most popular use case for Ethereum right now. It's kind of the killer app, but there's so many other things, right? There's the tokenization of real estate. There's the tokenization of identity. There's the tokenization of, it could be car titles, credit. Like there's all of these things that are coming, and it's all going to start, even though we've been at this like 10 plus years, it's like ground zero because now you have a positive regulatory environment. I think the best example of that is, for those that have been in the space for a while, go to the SEC's website today, and you're going to see on the front page of the website, like a promotional video by Paul Atkins, the current chair of the SEC, talking about the tokenization of securities, the tokenization of real world assets, and how the US has to be at the forefront of innovation in blockchain technology. That's on their website. You go back a year and you look at the SEC website, big red bold letters at the top, beware of crypto scams, like crypto's bad, right? Wouldn't tell you if Ethereum's a security. So it's really night and day. And that part's bipartisan. Like, I don't think we're going back to no matter what happens in the political landscape, which I'm going to stay away from. But like, I think crypto is a bipartisan issue, and the technologies like AI, it's here to stay. And I think, knock on wood, all this development happens on Ethereum.
It always should have been a bipartisan issue, but the fact that it's being talked about at all in the highest offices of the land, I mean, if it had to go one way for one election cycle, I think the other side took a look. It's like, yeah, I guess this stuff is pretty sticky and it's here to stay. I just briefly, and there's members of the community on Reddit that know this, but I just got back from Princeton, of all places, for a conference related to kind of the history of money, communities, and religion. And it's like real heady stuff. But like there was a Harvard history teacher that was talking about the early credit system in France, like in the 15 or 1600s. But like, a lot of these professors, even at the Ivy League schools, they just don't know anything still about cryptocurrency. And now they're really starting to kind of tune in and listen like, okay, we got to learn about this stuff a little more, especially with the rise of AI. And we'll get there with that. But Paul Brody, who's a good friend of ours, was there on behalf of EY. And he's their global blockchain leader. Good dude. He likes barbecue, I can tell you. And anyway, he was really illuminating to the conversation, as he always is. He's pretty natural at it. Yeah, to your point, it's obviously a bipartisan issue now because the crypto world is bringing them all along, kicking and screaming, and now the banks better figure out what to do. How are they going to be able to assist in the revolution a little bit? Because I think their services are going to be needed by a lot of people, even if it's. We'll see how much of it stays decentralized is the real ask here. But I was going to, yeah, go ahead.
Like, take a look back in the internet. I mean, what did the internet do? It was the digitization of information, the proliferation of that information on a global scale.
Yep.
What do blockchains do? It does what the internet can't. It is the tokenization of assets, right? And it allows for the global movement of those assets 24/7 without a trusted intermediary. And so if you look at where the internet was, we started with, there was the intranets, right? These private communities where information was shared. And, that's where there wasn't the regulatory framework there wasn't the compliance infrastructures for large institutions to jump into. They didn't want to be on the public internet. Now you look at everything and it's all public. And so I think it's going to be public blockchains add a much more robust layer of security and resilience than you could ever get in a private network. And you add trust. And so, I mean, I don't think that occurs if you have a blockchain with like 3 nodes and like, one data center. That doesn't work. But if you look at Ethereum with millions of nodes and decentralized across the globe, it doesn't matter if AWS goes out.
Right.
I mean, I know there's a lot of validator nodes that run in AWS, but there are people running Raspberry Pis, and there's people on all sorts of other infrastructures globally. So I think the public blockchains are here to stay. I think institutions are realizing that, and they're going to add a layer of control and security as needed, either in L2s or on top of that to make it work.
And to your point, Ethereum never went down. What was it, 2 weeks ago when we had massive rolling blackouts across AWS, and I mean, if that's not a wake up call, I don't know what is, because you can lose those nodes that are running on AWS, but we're decentralized enough that the whole thing worked, it didn't go down. I mean, shout out to decentralization.
Yep.
I don't want to run out of time with you. I got a couple more. This is a pretty heady question, and I think it's a very topical, timely question. Although I think we're all still struggling to find some of these answers. But the AI integration is specifically within the realm of Ethereum. What do you believe will be like some of the biggest growth opportunities for companies that are dealing with AI and Ethereum and the integrations that they may have over the next year or two?
We'll see. I mean, AI is an interesting one. Like, if you look at the big developments, obviously there's regulatory. We've got tailwinds pushing the industry. AI is an interesting one in terms of like how you implement that. What's your use case? I think there's a lot. I think more importantly, what we're going to need to see is the back end rails get rebuilt for a lot of traditional settlement mechanisms, whether that's the security market, whether that's banking transactions and SWIFT. So I think that's probably bigger than AI. I think there is room for AI to get into automations where allows for the payment rails to be integrated, but I think that's going to be slower. Mm-hmm. It's kind of scary. Like, AI is one thing if you allow it to like we won't even I won't let AI respond to an email for me.
Right.
I may use it draft if it's like if I'm emailing the SEC, it may be like I'm gonna, instead of a spell check, I'm gonna AI check it, right? And it can write better than a traditional spell checker. But I don't think we're at a phase yet where people want AI to control their money.
Yeah.
Right. And that's really what we're talking about. Like, it's not, I don't think it's there yet. I think it will be, right? 100% will be. I think there's bigger opportunities than just tokenization. I don't think you need AI for that in the next couple of years.
Yeah, specifically that window of a couple of years. Yeah, I agree. We should not move that fast. You could see some. I mean, you could see some pretty irresponsible crap if an AI was like thinking that it needed to convert to paperclip stocks or something. And
you can run bots on AI. I mean, that's risky business. I mean, I'm sure there are people that are already doing that, right? Writing, trading bots use AI but I don't think that's not on, in terms of an opportunity for, on a global scale. I think there's a lot more before that.
Very good. And this is probably the biggest softball question of the whole thing, but how optimistic are you about the overall trajectory of Ethereum and digital assets heading into 2026? What are the risks and catalysts do you think investors should watch most closely?
Well, if we limit it to 2026, I think, there's two things. One is the price risk and the other is the utility risk. On the price, Ethereum has been the best, if you look at from 2016, it's been the best performing asset. It's beat Bitcoin, it's beat NVIDIA. I think it's a pretty good place to be. We've got the regulatory tailwinds, adoption is coming, money is flowing in, applications are getting built. And so it's an opportunity from a investment perspective to get access to effectively a world computer that all real world assets can be tokenized on. That's exceptional. I think in terms of headwinds, I think the biggest one's not a year out. It's probably a couple years out. Is what happens with quantum computing? But I think that risk is much bigger than I think Bitcoin's they're in trouble with quantum computing. If you can take a public key and rebuild the private key, Ethereum would be much faster to adopt. If you just look at upgrades on Ethereum compared to Bitcoin, it's like, night and day. And that's another bigger issue, and that goes beyond. I mean, SHA-256 encryption and all of the standards are used for financial markets, everything across the board. I think we have a bigger issue when that comes. So that's not necessarily just a crypto risk; it's a risk to anything that's using modern encryption to protect passwords.
Yeah, and a better way to do that question shouldn't have been next year. It should be next 10 years. Let's do that trajectory next 10 years.
The next 10 years, the biggest risk is quantum computing. That's with some time in the next 10 years, but I think there's plenty of time for that to adopt, especially for Ethereum. I think it'll be much faster to adopt than many of the other chains. Apart from that, I don't even think political risk is one. If you'd asked me a year or two ago, I'd say it's all political risk. The US is behind blockchain technology now. The cat's out of the bag. It's not going back in. It's bipartisan. It's nobody's going to go against crypto because the lobbying is too big, and you just lose, right? Mm-hmm. You can't win an election if you're going to be against crypto, because most Americans have some now are getting exposure. So, I think it's hard to say on the price, right? The market's volatile. Things happen in the world. It's still a small percent of total, investable assets is an asset class. So we could see volatility. I don't want to make price predictions, but I would hope by the end of next year we're at 10,000 plus. Mm-hmm. But you never know, right? It takes time.
Yeah, that's if there was one metric or one meme that kind of I feel like is the most overlooked and it's just kind of confusing is there really is still like a store of value narrative to Ethereum. It just didn't catch on as like the most important thing. And it's like amidst all of the innovation and all of the milestones, all of the adoption, and as we now know, the bipartisanship coming along, at some point, it feels like if the price goes up past a certain number, all of a sudden, oh yeah, it's a store of value now. And it's like, it always has been. It's like I don't know, but it doesn't always present itself the same, year over year as we would want it to. And I was looking on your site, and there's the economic flywheel aspect, I think is eventually the real nut and bolt of this is the amount of economic activity that could fly off of this thing if you use the tools just right, that it may not always reflect in price of ETH itself, but there's a yield that can be sipped and those dividends can pay out. And I think maybe that's a good narrative. What are your thoughts on that?
No, you're 100% right. And I don't want to bang on Bitcoin, but all these companies that are going out and following the Michael Saylor playbook, which makes sense for him to pitch to these companies, like everybody should buy Bitcoin and put on your balance sheet, because if they're buying it, creates demand, and he's buying it, like it's self-fulfilling. It's like the self-licking ice cream cone, right? Mm-hmm. And so what I like about Ethereum is there's a whole digital economy in which you can build a business inside of that is not solely tied to I hold a pile of ETH, right? Like, we hold 70,000 plus ETH, but there are so many opportunities that we're looking at that we can go after that are going to generate, a highly scalable, high margin revenue that you couldn't do with a Bitcoin. And so when you look at all of the things that are getting built on ETH, there's like endless opportunities within this ecosystem. I mean, we're staying more on the infrastructure side, so validator nodes, block building, and within the DeFi space. But there is so much that you can do. Yeah. And I think that's what's most interesting and that's why it's a hard story to tell of, what is Ethereum? Well, you own a token. It's like owning a share of the internet 25 years ago. Mm-hmm. And that's a much harder story to say, right? Like Bitcoin's like, oh, it's like digital gold. There's a fixed number, unless the miners, of course, decide to fork it, which they could. It's the ETH narrative is just a harder story. We've tried digital oil. We've tried all these things. And it's just awesome. Like
ultrasound money, the triple point asset.
Yeah. I mean, everybody's trying to come up with a narrative to give that elevator pitch of what Ethereum is. And it's hard. It's really because it does so much. And the other thing is it's not really inflationary, right? It can be deflationary or inflationary. I mean, that wasn't always the case, but you look at it now compared to most of the other blockchains, and it's like, wait, you're not getting diluted, right? The more transaction fees, the more gets burned, it kind of holds flat, and you don't want a supply that's constantly decreasing because people lose money every year, right? People lose Bitcoin. You got it in a dump. You're maybe never going to get it out. So I think that's where it's a much harder narrative, and I think it'll always be a harder one. It's just, you're buying the next internet. That's what you're buying.
That's the way I always kind of express it to people that are like, you've been in it a long time. How would you describe it? It's like, it's just a different way of doing the internet with a little bit of monetary layer on there. That's really nice, because a lot of people, I'm always like going back to the early days of the internet where you had the bulletin board system. Well, after that, you had these kind of centralized entities. America Online was putting CDs on cereal boxes, and they were there's a funny story about all that too, by the way. I won't delve into it too much, but anytime AOL ordered CDs, compact disc manufacturers around the world halted production of anything else. That's how many CDs they were printing out, getting people on their rails. And then you had Netscape and then hypertext transfer protocol systems. Now you had it. Now it's, more open than ever. And people are like, well, that's fine, but that's free. Why would I need a different way of doing the internet? It's like, I don't know, censorship resistance. You can curate your whole feed the way you want to earn your money, how you get paid, when you get. I mean, there's a billion things you can do that are better than this. And this is pretty fun. I mean, we're using it now to do this podcast, but after the show, we meant this episode so people can own a token on it, an NFT as a thing that sits in their wallet. I don't know. It's just, there's cool stuff that could be done. It's so early, it feels like 1988, 90.
That's the amazing part, is there's so many business models that we haven't even thought of. I can give lots of examples of, you could tokenize your car title, and, if you don't pay your monthly amount, your car is just going to be self-driving in 10 years. It'll just drive off, and the new personal, the lender will own your car, right? And they don't have to send anyone to get it. It just comes to them. But there's so many things, right? Like concert tickets, you can get commissions on secondary trades. You can have, it's just like endless possibilities. That's one of the reasons why we haven't gotten into the application or side of the business, because there's so many things. And the one thing I look at is there's so many incumbent players that have all the customers, and that's the biggest key. So you may have a better mousetrap, but if you don't have customers come use it, you're not going to be successful, because the best techs don't always win. And I think what's going to happen with a lot of these solutions is these large corporations that already have a built-in customer base will adopt blockchain technology, and the front end won't change much, and the customers will just have a better user experience, cheaper fees, 24/7 trading, and they won't even know what happened or why, and they won't care. And that's the most important thing. Like, I don't care how my Uber shows up, as long as my Uber shows up when I order it. Like, I just ordered some lunch, like I want to show up at the door. Like, I don't need to think about, SMTP or any of these protocols, the early ones in the internet. And I don't want to think about what EIP change made Ethereum's blockchain capable of doing this, or what was it, ERC20 token or whatever. Like, I don't care. Like, did it work? Is my life better because of it? And I think when we abstract the technology from the users, there's going to be, that's when we're going to see real adoption. And now that positive, regulatory tailwinds, I think there's going to be a lot of money that piles in. So it's going to be really interesting to see what happens in the next, 2 to 5 years.
Oh yeah. It just keeps getting better, man. Like, this has been the biggest and most impactful last 12 months, I think, of really since the beginning for me. All the things that I wanted to have happen for me personally, the biggest thing was the idea of smart contracts, and the second biggest thing was energy consumption savings, which is another narrative that got lost in the shuffle against Bitcoin, and it really shouldn't have, but here we are. I mean, those two things came to light, and then there was the big surprise of the ICO days and the big surprise of the NFTs, but this thing now where you're hearing about it every day in the news and in the halls of governments, it's really encouraging, and it's fun to be here to witness it all. Like, I don't know about you, but this is a pretty exciting time. For me, it must have felt like back in the 20s, 1920s when like electricity and cars were really starting to be popularized, that all gave way to the radio and eventually television and all that. So it's just like the 20s all over again.
Yeah, no, I couldn't agree more. I mean, like I've been at this in the public markets for 11 years, and this like the last year is the first time where I don't have the SEC trying to put us out of business. Like they were the biggest viewer of our website. We actually engaged a service to watch them watch us. It was just crazy. Now I look and I'm like, wait, I don't have any of those hassles anymore. We can build a business. Money's flowing in. I mean, I know the last couple of weeks have been tough, but like money's coming in, applications are getting built. It's like, it's super exciting, right? It's the first time like we're hiring more than we have in the last decade. It's like, even with the market cycles, it is probably the best time to be in the space. And I always thought I was late. I got into crypto in 2013. I'm like, I'm late, right? Which is crazy. I was like, all these guys have been in this for like, a year before me or something. Now I look back and it's still like, I look now and I'm like, we're not late. Like I don't think we would be where we were if like big players didn't also come in. And because at least on the Ethereum side, we're the only public company for like 5 years doing this. And now we have, Joe Lubin, who, was one of the co-creators of Ethereum and Consensus, and he took SFED public. And now we've got Tom Lee, who does a great job, selling Ethereum to Wall Street. And, there's only, 7 or 8 players in the public markets doing anything beyond ETFs. And it's super exciting to be one of those and kind of at the forefront of, the cutting edge innovation.
Charles, anything else you want to add here before you go? I know you gotta head out soon.
No, thank you so much for having me. It's super exciting to be on. We'll have to meet up at ETH Denver, and for anyone watching this, you should follow us on X, or you can follow the company on X, and feel free to reach out if you have any questions. We respond to emails via messages on X, or you can email us at ir@btcs. Happy to answer any questions on the company. So
there you go.
Yeah, that's it.
And I got your Twitter feeds up here at NASDAQ BTCS and at Charles_BTCS. Give him a follow and give him a like. And we really appreciate you and for coming along for the ride today. Thank you so much.
Yeah, thanks so much for having me.
Awesome. Charles Allen, ladies and gentlemen. And we're really glad that he could come along for the party today here on the EV Mavericks Down, the Doots podcast. And now we're going to switch gears on over to our Doots of the Week. And here we go for this week's roundup. I got to get the music going here at some point, I think. Here we go.
Took time off, we would lose a great researcher.
All right, I'm going to hop off. Thank you so much.
Thank you, Charles. Take care.
Collusion system.
Yeah, take care. Bye-bye.
That would be a tremendous loss to the world, but the Ethereum machine would just keep chugging. Just keep chugging. Just keep chugging. Just keep chugging. Just keep chugging.
The Weekly Doots live stream is all about showcasing the best of the week from the daily general discussion on our Ethereum. This is a read-along reaction series, and if you want to follow along, head to dailydoots.com, designed and produced by our very own Henny Abu. Big thanks to Tricky Troll for capturing and curating each day's Doots, and the A word for curating this beloved weekly list. Make sure to subscribe to us on all your favorite platforms by visiting dailydoots.com. Oh, yeah. Here we go, guys and lady. November 7, 2025. We got the morning roundup. Day trader BIH chimes in Ethereum. User Alex is Kef at 33.69 on the old price. $10.9 with the ratio at 0.03276. I should probably go straight to the leaderboard here, get our top 10 for this week. Aiden Cairo at 118, Ethical Trade at 119, Crypto Currency at 127, JS Tears at 133, Henny Abu at 134, Tricky Troll at 164, Benito 2030 at 176, Superfizz at 236, LogrisTheBard at 245, and Harag at the top of the heap at 281 Doots. As of today, we have 1,267 Dooters on the leaderboard. All right, here we go. Weekly haiku courtesy of JS Tears. Long for Piñata, 1 month until Fusaka. Upgrade Armada. How does he do it? How does he do it? JS Tears for your haiku of the week. And our ship post of the week comes out to us by way of Stoby, because we always like to save the best for first. Stoby, let's see. This is incorrect. Let me find the right one. I don't know if they were messed up on this one. Rounding error. Okay. All right. Ship posts by Stoby. The recent Bunny Dex exploit and Balancer exploit were the same error. Allow pushing the system into an extreme state and then capitalize on how high impact rounding error. From timing, it seems likely either attackers were the same group or Bunny gave Balancer attacker an idea. Same thing happened with the Dow exploit. Nikolai saved Maker from reentrancy. People saw the mechanism and then looked for other places vulnerable to it. Somehow we all overlooked this class of bugs, and the weakness survived auditors for years, but now attackers will be looking for it everywhere. Feels like the chance of another one is high for now, like when there was a wave of flash loan and Oracle manipulation exploits. Okay, so that's not our ship post of the week. That's a legit post of the week, and that's okay. We'll move on. User Rachel at Seeds explains how Seeds is helping crypto solve one of its original Proclaim solutions and repairing its image one fundraiser at a time. This is a relative this is a duder number one. Duder number one for this week. Excellent job. Rachel at Seeds making it on the weekly podcast is a first time duder. All right, here we go. Since Snap expired yesterday, the Seeds Blockchain Mutual Aid Project is raising funds to help Americans struggling with basic food costs. ETH contributions to help out our friends and neighbors who are having trouble buying food are super appreciated. I'm the founder of Seeds. Here's a pic of me with this Reddit handle. Here's a link to the time Seeds competed in TechCrunch Disrupt Battlefield in 2016. Wow, it's a long time ago. We've iterated a bunch since then and introduced blockchain tools to help people in need in 2017. So you know I'm real, and so is Seeds. There she is right there, Rachel at Seeds. And then here she is on stage, Seeds helping developers. This is a tech article. Okay, interesting. It continues, or she continues. Seeds has used blockchain tools to help people in need 30 countries now. You can see some past beneficiaries here, including school children in Haiti and South Sudan. All right. Oh, there we go. There's the pictures on the page. Okay, good deal. Continuing on. Here's a video interview I did with the former child soldier in South Sudan who got help through Seeds, started a hygiene stall business, and then fully took the initiative to teach a bunch of people in his community how to benefit from Seeds too. In my view, an example of one of the original dreams of blockchain. We get shit on a lot even as we're working to help because there's so many bad actors in crypto. So many people who love helping others hear the word blockchain and immediately think bad. It's demoralizing and has really hurt our reach. We need the folks who truly care about the ideals decentralization promised us, like global financial inclusion, to support the work Seeds does to help people in need. This is the only crypto sub since ETH Traders Daily moved here where I really see that spirit. I'm going to stop right there. That is a fact. That is a big time fact right there. And I'm going to get on my soapbox just for a second because I had the opportunity this last week to go to Princeton, and the thing that they wanted to know, they wanted to talk to me about community leadership and what it means to be a leader. But when I got there, I told them about the community, and I'm just a custodian that just happens to be like a public facing person. These EV Mavericks that you hear about and see out there on X, a lot of these people are like, they give a lot. They give a lot of their time, their talent, and treasure, sometimes all three. And I feel like Seeds is like pretty much right in the pocket of what we do. We fund public goods. We're big supporters of Gitcoin projects, Octant projects, I mean, we've had Kevin Owaki on our podcast. We've had James from Octon on numerous times. And so, yeah, this idea of being able to reach out into the world, and I'm glad that you recognize the ethos of this community because, damn it, we got one life, and it ain't all about buying a Lambo, I can promise you. All right? As Seeds is better known, it can also help later crypto adopters start to recognize that blockchain tools truly can be used for good to reform crypto's poor mainstream reputation. If the above resonates, we're super grateful for any support you can offer folks who are struggling right now with food costs. You're also very welcome to use Seeds to ask for help when you need it yourself. Okay, Rachel, there you go. Don't be a stranger. Continue to post in the daily anytime you got an update or an ask or whatever. You never know. Every little bit counts. And, we could use tools like our previous guest had. Maybe there's a way to make an investment that makes a flywheel thing where we're spinning off dividends from a shared validator thing. All right. Okay. Very good. Keep up the good work. Don't be a stranger. Duder number one for this week, Rachel at Seeds, stopping by and dropping some love. All right, here we go. Harhog does a post-mortem on the recent blob spike feed. Harhog, as we all know and love, is the top of the leaderboard. Here we go. This is in response to a post yesterday by Fizzless X. Fizzless X is an OG. He was asking about a massive spike in blob gas fees last Thursday. I looked into what probably happened. My response got a bit longer than I first intended, and maybe some other people are interested in it as well, so I posted in today's daily. Thanks. I was not aware there was such a massive blob gas fee spike on Thursday afternoon. Blobs have a similar pricing mechanics like normal transactions on Ethereum. There is currently a target of 6 blobs per block. If more blobs are posted, the price increases until the rollups stop publishing more than 6 blobs per block, and then the blob price goes down again. I looked at the various data from the time of the spike, and here's what I think happened. First of all, I'm not sure that the ultrasound money data is accurate. There's definitely a price increase, but I'm not sure it was that huge at that time. I think one reason for my confusion is that some sources state blob gas prices as price per byte of blob space on Etherscan. Okay. Goes on. Even though the numbers seem very high, the actual price in dollar terms paid is not that much. I found prices of around 37 cents paid for the blob fee alone around that time. This is still less than the price paid for publishing the paid blob on chain, which was around $3.50 that time. Now, let's look at the spike itself. At the moment, we're on an average close to the 6 blobs target. It only needs a small increase in blob demand to go over the target and prices start increasing exponentially. On Thursday, we had a very volatile time in the market with the ETH price went down about $300 within a few hours, and then it partially recovered afterwards. This volatility increases DeFi activity, also on rollups, which then lead to increased blob demand. According to Hill Dobby's Dune dashboard, there also seems to have been an increased blob demand by a relatively unknown rollup called Shape around the same time. Shape was the second largest blob user for several hours. No idea why Shape had such a demand increase, because I do not see any activity increase on their L2 beat page. Maybe it was just an algorithm of theirs going haywire. I would guess these two factors pushed the blob prices upward over an extended period, which means the blob pricing algorithm went exponentially higher with every block. In the coming months, I do not expect to see such spikes for some time at least. The upcoming Fusaka upgrade on December 3rd will increase the blob target limit from the current 6 or 9 to 10 to 15, and then 14 to 21 within a few weeks. That's more than double the block space. It will take some time to fill that up. And currently, core devs are already discussing going 64.72 within a few months.
I love it when a plan comes together.
That would increase the blob space by more than a factor of 10 from today. More than enough space to absorb the spikes. To make sure blobs are not handed out for free, Fusaka introduces EIP 7918, which sets a dynamic minimal price for blobs. The minimum will still be low, around a fraction of a cent, I guess, but far away from one way, which they would be without EIP 7918. And then Harag, as always, cites a lot of sources. Great job this week, Harag. Thank you. User 12 Meatballs continues the Buenos Aires stablecoin spending challenge. Well, I got a lucky break, she writes. An event appeared on Twitter for stablecoin ice cream, a challenge by Ari Eberman to meet at Crecimiento to go to the best heladeria in Buenos Aires. Man, forgive my Midwest Spanglish. I don't speak any foreign languages except a bit of French, but only like 7 words, and you can't say them on TV. Well, let's buy some ice cream only using stablecoins. It immediately had my attention. Ari didn't really think anyone would come. In the end, 18 of us showed up, and he was regretting not having warned the venue that we were coming. The server was a bit overwhelmed with us, but did his best. Apparently, one person convinced him to make a settle wallet before the owner jumped in and said only pesos. I tried to pay with Peanut. Apparently, that's an app. It failed. Other people got it to work, though, and ended up using my Gnosis Pay card instead. The guy behind me just shrugged and paid with cash. All right, just to catch the listeners up, apparently 12 Meatballs trying to spend crypto at Buenos Aires for the conference. All right, so it's not just me. Let's see. Let me go. So Ari says, I want to make sure I read this correctly, make it coherent for you guys. Ari says 50% of participants who are actively working 9-to-5 jobs in Web3 today, they couldn't even pay with a stable coin on chain. So it's not just me who is struggling to make this work. Argentine adoption is about holding stable coins, not actually using Web3. I see. Here's the rub. So the narrative is like Argentina is quickly becoming like a cryptocurrency nation, but it's just a lot of people holding stable coins, not actually doing commerce. So there's friction at the registers here. Okay. All right. So people spend using a Binance debit card or similar, trading their trust in TradFi banks for trust in a centralized exchange. Here's all the methods we tested: Peanut, Gnosis Pay, Ready, which is on Starknet, Yodel, and Redot. Yodel currently offers services in Brazil, Philippines, Vietnam, which don't require KYC. However, for Argentina, they need to KYC their customers. So the only person who could use their app at the ice cream place was the Yodel staff. He got a message that it was sorted while we were still there and told me that I should be able to start using the app next week. Someone using Peanut won the award for the best FX rates, and then realized that Peanut and Yodel were using the same exchange rate. So the only reason he won was the volatility over the 30 minutes that it took us to place our orders, which was, of course, the point. I won an award of $25 of Bond coin for having the third worst FX rate. The biggest reward was a 1,000% cashback award for using Wallet Connect. That went unclaimed. No one could work out a way to do it. Overall, the event was a personal success for me. I received 25 bond dollars, of course. I got wind of 2 more apps to test for payment options, Yodel and Settle. Another app, Luca, sounds interesting. It's aimed at helping the mainstream use stablecoins for savings and gain DeFi yield without needing to understand Web3. When I mentioned trying and failing to convert stablecoins to fiat, someone said that for peer-to-peer, you need a friend with a friend. Well, that's how it works in Buenos Aires, they said. I see, she says, and then grinned hopefully. So, do you have a friend? That person says, I do. Well, watch this space. Hey there, Garmex gave me a little shout out on the YouTubes. Thanks for stopping by the stream. So thank you, 12 Meatballs, for that update. Always does a great job writing these recaps, giving us some day-to-day stuff. All right. User ETH Daily fills us in on the balancer exploit. User ETH Daily is a relative newcomer, but hope they stay around for a long time. Duder number 2, ETH Daily providing news updates out there. Shout out. All right, duder number 2. Good morning, friends. This is my first time here. I do my best to curate roundup of ETH news every weekday. I was invited to Reddit by JT. That's me. All right, so here we go. Balancer on November 3rd wrote a article here. Balancer V2 suffers $110 million exploit. Let's talk about it. Balancer, a pioneering AMM, an originator of the 80-20 weighted pool design, suffered a smart contract exploit on November 3rd, resulting in $110 million in assets drained from its composable stables pool and Balancer V2 forks. The hack impacted multiple chains, including Ethereum, Arbitrum, Base, Optimism, Polygon, Sonic, and Barra chain. The majority of stolen assets consisted of ETH and liquid staking tokens like WST ETH, OS ETH, and RETH. All right. Launched in 2021, Balancer V2 introduced a singleton vault for enhanced capital efficiency. The composable design exaggerated the exploit across pools and chains. Balancer V2 underwent multiple audits by Open Zeppelin, Trail of Bits, and Certora. Balancer V3 deployed in December 2024, and non-composable V2 pools remain unaffected. Balancer V2 users should immediately withdraw funds and revoke token approvals. Here's the Balancer exploit response efforts. The Balancer V2 exploit triggered various responses and affected chains of protocol to mitigate impacts and freeze stolen funds. Balancer immediately paused all possible V2 composable stable pools and entered recovery mode, isolating the issue to legacy V2 infrastructure. Barra chain coordinated validators for an emergency hard fork, blacklisted attacker addresses, and recovered assets from compromised pools. Sonic activated a new on-chain account freeze mechanism. Let me read that again. Sonic activated a new on-chain account freeze mechanism to lock the attacker's wallet without a hard fork, pausing affected pools. Downstream protocols like Beefy and YieldFi paused V2 integrations. Security teams from PeckShield, Nansen, Blocksec are tracing funds, with some already blacklisted on exchanges. Well, thank you for that teardown there on that exploit. Toss that one on the fire for 2025. User ETH Daily, thank you so much. User Numerous Ruin 4947 still has conviction, but acknowledges the struggle. Yeah, the struggle. I hate to say it. Duder number 24. I hate to say it, but it's just holding BTC would have been a lot less stressful and probably healthier for many of us. Stress kills. And yeah, people will say that means you invested too much or didn't manage risk. But realistically, holding ETH over BTC since 2021 has been the wrong move. It's been painful watching the ratio bleed while putting in the research and conviction. Get me wrong, Bitcoin has plenty of issues ahead. Yeah, that's an understatement, and I wish more people would say it. I'm putting words in his mouth. I'm just speaking on my own here. Bitcoin has plenty of issues ahead. That's your bumper sticker. All right, they continue, and I'll shut up. The block reward decay, the security budget, the lack of real development, they're all still there. But in a twisted way, it might just get away with it. Or maybe we'll all be 20 years older by the time we're finally proven right that Bitcoin's long-term model is cooked. Bitcoin's had an easy ride, fewer updates, fewer dApps, endless marketing. Meanwhile, Ethereum has to be in the trenches constantly, upgrading, iterating, proving itself through fundamentals and real metrics. It's exhausting watching the harder working chain keep losing the narrative. That's an understatement. If Tom Lee or any of these market guys want to save face, they'll have to start buying ETH on the open market and push the price up. I thought they did, kind of. Because like it or not, retail comes back when ETH starts moving faster than BTC. That's what shifts the narrative. And no, this isn't a capitulation post. I'm still here, still holding. I just hate that it feels like being right about ETH takes more pain, more patience, and more proof than anything in this space. Maybe that's what separates conviction from coping, or maybe I'm just a bottom indicator. I love the honesty. User Numerous Ruin 4947. And if anybody in the audience wants to hop on stage and riff with me on this, feel free to raise your hand, and then Treebeard will get you up here. Yeah, what is there to say? How about stop pointing out price as being like the only metric for success? Because like at the end of the day, whenever you feel like it's time to cash out to US dollars, you may not have to. Like the flywheel effect, put your money to work. All these things come to mind. The reason why the price isn't exploding is because gas fees are down. Well, if the gas fees are down, then you're not making revenue for the people that hold it. Yeah. So, I mean, what do you want? You know, like you want high gas fees? So, because, I mean, this is ridiculous, right? It's just like there's only one argument for Bitcoin. It's send. Okay. That's it. That's all you could do. So there's no attack vectors beyond that. It wastes more electricity than nations on the earth to secure an asset that does one thing. And you know what? People just think in terms of one thing, and that's good enough. Guys are only thinking about one thing. Am I right, boys? Yeah? Okay. I settled my whatever. That's all I got to say about it. You got to find other ways to put your money to work. Have fun with the stuff, you know? Yeah, it's just as the planting of the tree narrative, right? If you planted a tree 10 years ago in Ethereum or 10 years ago in Bitcoin, you're up, right? Everybody can pick these little time. Yeah, okay, 2021. You're up if you would only had Bitcoin. That's if you never did anything with your Ethereum during that time. That's the difference, you know? The only way you can earn yield on Bitcoin is by using Ethereum to make it useful, all right? Because sitting in a wallet doesn't do anything. It doesn't generate yield just sitting there. You have to use Ethereum to like whatever, wrap it and go do stuff with it. Anyway, how are you guys doing? I'm glad you're tuned in out there on X, on the YouTube, on Twitch. This is Daily Doots Podcast. We're going to move on down the list. If you wonder where all this stuff comes from, it comes from the daily general discussion on Reddit on our Ethereum. If you only use Reddit for one thing, use it for that because it's a good room. And there's good people in there and a lot of good exchange of ideas. And we're not all maximalists, I promise. I mean, I am. I'm an ETH maximalist, but not everybody is. Good community, very grounded, honest people. I love it. All right. User Rhythm of ETH shares another bit of new TradFi tech for the EVM. Rhythm of ETH this week is a Deuter number 79. Big boy. All right. New open source project just caught my attention. An on-chain validator for EMV for Visa, MasterCard, and EuroPay payment card signatures. Okay. In short, all right, this is interesting. It lets smart contracts verify real EMV chip transactions directly on chain using RSA 2048 signatures, the same cryptography your physical card uses, and then settles the funds in stablecoins through smart contracts. Well, that sounds kind of familiar. Little Grid Plus Lattice One safecards use, I believe, the same chip. If this went live, it would mean your card could trigger a payment that settles instantly on an EVM chain instead of through Visa's centralized network. Merchants could receive instant, programmable, and transparent payments in USDC or any ERC20 token with fees, taxes, and royalties distributed automatically on chain. Have in mind that merchants do not receive funds when you swipe your card. These are settled in up to 7 days later, normally the day after. They also pay considerable fees. It's basically Visa Rails, but open, auditable, and programmable, a bridge between traditional EMV hardware and decentralized settlement. No more, quote, swap your stables for fiat so you can swipe a card, unquote. All merchant payment terminals are compatible and can be jailbroken. Oh, boy, I wish I had LogrisTheBard here to kind of walk me through this because I feel like if I try to pontificate on this, I'm going to butcher it. But basically, it's a way to, yeah, I'm going to leave it there. I want you to read that at dailydoots.com. If any of you have a better way to kind of boil this down for my little smooth brain, that'd be great. Just even a little thing in the Dudes podcast chat here on Discord. So I'm going to read this paragraph here. In short, it lets smart contracts verify EMV chip transactions directly on chain using RSA 2048 signatures. It's the same cryptography your physical card uses, and then settles the funds in stable coins through smart contracts. Am I to read this that when you pay a merchant, they will receive stable coins through smart contracts and then it can be redeemed up to 7 days later? I don't know. Yeah, I need help on this one. I may be looking at it completely backwards. All right, user El Iter Elote is checking out a price checking and checking in on their mental health. Ooh, I love a good mental health post. El Iter Elote is a duder number 6 for the week. I don't think I've gone more than a handful of days in a row without knowing what the ETH price was since 2016. I think I'm going to take a break. Call it a no check for the rest of November, hopefully longer. But before I do, I had some disjointed thoughts to share. I'm not selling. Maybe I'm just capitulating mentally. Okay. Using a log chart and zooming out paints a totally different. Let me fix something here. Sorry. Using a log chart and zooming out paints a totally different picture than the sentiment reflects. Zooming out far enough on any chart and the trend is still up. Is this up? Is this cope? Maybe, but the best fit line I could draw on either chart, not TA, shows a distinct upwards trend. Okay. Well, this is crypto. We've been up only since April of this year. And while we're down 40% from the latest high, we're still up 70 to 80 from the May and April lows. We've seen greater run-ups and downturns alike. Take a breath. Turn off the devices. Spend time with your family. Take care of yourself. Hit the wife. No, wait, hit the gym. Make someone laugh. There, I got the second part right. If you have the conviction in the investment, then you can avoid letting the price impact your mood by doing these things. Make a pact with yourself to avoid crypto media and the price for a couple of weeks, maybe longer. I say this as much to this daily as I do to myself. Shout out to LogrisTheBard. Sounds like we're in the same boats. We lost our jobs. We got hit by Balancer and experiencing this downturn now. I doubt someone as sharp as you will be in the doldrums too long. Avoid holding complex DeFi positions and a multitude of coins. The mental bandwidth of tracking these things isn't free, and it comes at a cost to other things worthy of your attention. Keep it simple. Hold ETH and stake it. This sucks. I'm not trying to tell anyone it doesn't suck. I'm not trying to say that the last few years of returns have been disappointing, to put it lightly. Just offering some thoughts that have helped me hold longer than I ever thought I could, in case that helps anyone here and do the same themselves. Well said. Like I was saying earlier about the quality of this community, that's what you can come here and get. That's just as plain as I can put it. People struggle, all right? People struggle. User Harog got the double for this week. Harog's at the top of our leaderboard, explains to us why the L2 Perps DEX is actually really interesting. A few weeks ago, Lighter, Lighther, is an application-specific rollup started on Ethereum. Lighter is a perp DEX, similar to Hyperliquid or Aster, and the uncountably many perp CEXs, CEXS, okay? Perpetual exchanges are used by many to leverage 10 to 100x long or short the market. Personally, I do not touch them because leverage is the easiest way to get flushed out, especially in high volatility times like now. One can also use them to hedge market risks or lock in current prices for a future sale of locked tokens. But as the 10 of 10 crash showed that one cannot fully rely on perps to have delta neutral portfolios. Nevertheless, Lighter is an interesting case for Ethereum's modular approach, as Lighter is not a full EVM rollup. It can do perp DEX specific transactions only. That means no overhead, no slow ZK proof creation due to the many complex EVM opcodes, just pure perp DEX action. God, that sounds hot. Lighter also does not publish each individual transaction in blobs. It just publishes the state changes since the last published blob on Ethereum. This means if someone did 1,000 transactions on their account since the last published blob, it still means it only needs one entry for the state update. That's a very efficient approach. The state diffs approach is something only ZK rollups can do, and many do that. ZK Sync, Starknet, so on. Optimistic rollups need to publish the full transaction data for the other people to prove that the current state is correct. But with ZK rollups, the ZK proof already proves that the current state is correct. So ZK rollups just have to publish the state diff once they last update. That's pretty neat. At the moment, Lighter seems to update its state every few minutes on Ethereum. In the last few weeks, L2Beat evaluated the implementation of Lighter and published their findings yesterday. Lighter only has one red slice in the 5 risk slices. Everything else is still green. It still has a stage 0 rollup, though, because the L2Beat team did not yet verify that the open source code for their node is able to reconstruct the current state. If this succeeds, they become a stage 1 rollup. And then it is only a question of how they set up their councils for smart contract upgrades, so people have long enough exit window in case of a malicious bridge contract upgrade. The interesting part is that even now, the escape hatch functionality is implemented. That means users can exit their funds in case of a proposer failure or front-end censorship. Not sure how user-friendly this process is, though. The front-end censorship is an issue on Hyperliquid, as some users could deposit, but when they wanted to withdraw, their funds were frozen as their wallet was somehow connected to unwanted entities or jurisdictions. As Lighter is a perp DEX, it naturally has a lot of transactions. Each individual bid and ask price change as each individual change in the order book needs a transaction. Most of these are done by bots to provide liquidity and arbitrage the different DEXs and sexes. That's why on L2Beat, the daily activity jumped from a few hundreds transactions per second a few weeks ago to 4.5 thousand yesterday. Pretty amazing development in my view. It makes it a bit more difficult to follow the TPS changes of fully EVM compatible rollups, though, as they are all overshadowed by Lighter. Maybe L2Beat finds a neat way to show EVM compatible rollups and app specific rollups in different colors on the activity chart. If you want to know more about Lighter, Bankless has a good interview with the founder. See the links below. And I thought it was a pretty honest evaluation how Lighter fared in the 1010 crash. If you want to know more about L2Beat and their mission, the Edge podcast has a great interview with Bartek, the L2Beat founder. See the links below, and those links are available at dailydoots.com. Finally, for this week, user ETH2353 introduces us to the $1 trillion security initiative. User ETH2353 for this week is a duder number 59. The EF announced the $1 trillion security initiative earlier this year, with one of the goals stated as companies, quote, companies, institutions, or governments that are comfortable storing more than $1 trillion of value inside a single contract or application, unquote. Good Lord, man. How do we make, I mean, I'm going to read that again. I was not aware of this. The $1 trillion security initiative announced by the EF, the goals, quote, companies, institutions, or governments are comfortable storing more than $1 trillion of value inside a single contract or application. How do we make DeFi safe enough to use if even the largest apps who do everything right, such as years of audits and no hacks, apparently get hacked? Why would anyone put a serious amount of money like that into DeFi? Does addressing this mean that we'll need to come up with better ways of dealing with hacks? Like some kind of semi-automated mechanism that can quickly be triggered? Because with these hacks, it often is necessary to react pretty quickly. For example, something that DeFi protocols could opt into and validators would respectfully voluntarily with a way to opt out. For example, Balancer could signal their contracts have been hacked and flag hacker addresses with some kind of bond to prevent abuse. Is that a thing? I'm mostly posting this because of the current situation on Gnosis Chain, where a hard fork has been proposed to reimburse the hack victims. It's already being discussed a bit in another thread in this daily, but I'd like to create a more general discussion on the topic. Are you a hardcore believer in not changing the rules no matter what? Even if that means we'll never know the concept of truly safe DeFi? I'm interested to know where people stand on this. That's a good question. What do we do? I'm curious what people in the community responded with. Stoby, user 18, Duder18 says, I expect we'll see another layer to prevent these things like phylax.systems, PHYLAX.systems, which will bring a Zirkit-like approach. Zirkit with a Z. Crypto Fructo, not a Duder. Not yet anyway. If the rules say you could do a hard fork, then doing a hard fork is not changing the rules. Aha! I like that. Ding, ding. That's pretty good. I like that. And then Duder14 responded, hard fork and the irregular state change are not the same thing. Not saying Gnosis shouldn't do it, but this wouldn't be a normal hard fork. Yeah, good point. Continuing on, AAQY and Duder 15. The DAO incident was mitigated thanks to a 1-month withdrawal delay that had been implemented. I wonder if modern protocols could adopt a similar mechanism. For example, introducing a delay when a significant amount is involved. This would allow time to apply preventative measures, negotiate with the attacker, or whatever. Being whatever something probably very controversial. That's kind of neat. Emergency freeze function of sorts. Okay. Well, that's awesome, guys. Listen, I need to see if we have our upcoming announcements. Oh, yeah. If you haven't minted your POAP yet and you're on the Doots list, you can check your name at dailydoots.com. Go to the leaderboard, look for your username. If you have a wallet address, you can put in your Reddit username on POAP. How about that? The POAP team built this out with a couple of us on the team. I would like to think I contributed a lot, but all I did was try to help provide the list and kind of help out in the background a little bit and give voice to it. So find your username, mint your POAP. You can still do so. And we have several different tiers here. The participant tier, which is like one doot or more. And then you got the bronze, silver, gold, and then the platinum. Platinum is, I believe platinum is 100 or more. But yeah, I helped make all these, of course, with a little bit of help from 696eth, who did the generated art for this. Oh, look at that. I lost my Zoom call. Let me turn on this one instead. Look at that. Hey, y'all. All right. So I think that's it for this week. I have to get this turned on here and move around. You guys, thanks so much. I should just say briefly, the postmortem from Princeton was fantastic. Flew home yesterday. Oh my gosh. It was... I felt like Dorothy visiting the Emerald City. If you haven't been to Princeton's campus in the fall, really any time is awesome. But that campus is like something out of a portrait of early America. But such an amazing architecture. I don't know. It's hard to put into words. There's just a lot of brilliant people walking around that campus. Always has been, sounds like. There's a lot of blood money. You can tell. It's kind of those buildings were, there's some blood money going on there. I get it. I mean, yeah, the Rothschild's Ark is out there. But the professors that I met, I went into that as a bit of a cornstalk Kansan, showing up as this, community leader, and they wanted to talk about religion and finances and history and how communities form and how leaders are born. And I think they walked away, I'm really just a champion of the voice of this subreddit, because a lot of the people on the Ethereum Reddit they've inspired me over the years. And I do this podcast to elevate the people who who are anonymous or pseudo-anonymous. And I just like reading Reddit, so you don't have to, because I think it's such high quality entertainment or high quality information. Obviously, on days when there's a lot of price action, wind, moon, and all that crap, and then I'm selling and never coming back again, you get these one-liners. But those people are not on the Duders list. They just aren't. If you want to find out who are the best, you can look up their names on the leaderboard right here at dailydoots.com. Pick any username that writes anything decently on a regular basis. 9 times out of 10, those people are going to be on the list, right? And you can use this search function here and just type in anyone. I'll just say like the A word, okay? He's the guy that helps put our weekly list together. I'm just giving you an example. And you can see your ranking and the number of times you made it to the daily list. And so Tricky Joel, right? He gives everybody their points. All I do is click a button to assign the points. And then in this, well, this is the stuff that I shared with Princeton, because we kind of have a social reputation score that is not tabulated by a robot. It's a real hand function. It's like a curation of a bonsai tree over time. Okay. It is subjective who makes it on the list, but we have people that post bearish sentiment that make it on that list too. So in terms of strict price action discussion, that doesn't mean that you're not going to make the list, right? What matters is what kind of quality content can you do to support your claims. Better yet, become a news aggregator. Bring the story, or help people understand what's going on. There's just people that understand what the inner workings of these smart contracts mean, and they can articulate, and they take the time to do it. They're taking the time to write it out in a long form discussion thread like Reddit. And that's what I talked about at Princeton. And I'm telling you, the professors, when I played the video, and I don't know if you've seen it, and I don't have it public on my YouTube channel. I may post it public today or tomorrow. But basically it was 5 minutes of like how our community evolved from ETH Trader and migrated to ETH Finance. And then how we closed ETH Finance because we knew we could make a bigger impact having a daily general discussion on the main technical forum. And I think it's just been great. I think it's just been absolutely great. And I hope that you guys stay along with us for the ride. We're 2 years into this podcast. We're not the biggest thing ever, and that's okay by me, because we got power. We got good people out there. Every time I meet somebody on X and they're like, oh, those guys, the Maverick line things. I go, yep, that's us. And they always say the same thing. Yeah, just they came out of nowhere, and then I started following them because it seems like they know their stuff. We're like our own little focus group, man. Anyway, I think that's all I got. Appreciate everybody smashing, subbing bells. If you got any guests you want to bring out. Oh, I got a good one I'm going to get on the podcast. He already said he would. Well, I freaking forgot to mention this dude. He is a computer science professor at Hebrew University in Jerusalem. I met him at Princeton. He's on a 2-year sabbatical, and he was writing stuff that eventually made it into the white paper for Vitalik. And so he knows Vitalik from back in the old days. And so he'll be on to tell us all about that and other things that he's done. Sweetheart of a dude. And yes, I gave him a bottle of barbecue sauce from Kansas City. I think he really thought that was kind of neat. I was like, yeah, well, hope to see you at the fire pit or Eat Denver someday. I don't know if he goes to those conferences because he's big brain. A lot of fun talking to him. So I'll be introducing him probably in December. There was another gentleman I'm going to have on the podcast who was a quant trader, Wall Street desk trader guy that has done some startup work in Ethereum in particular. He totally gets it. Snappy dresser too. Good talker. He'll be real entertaining if I can get him on. Yeah, I probably got 3 or 4 candidates come on. There's a guy that runs it's really cool from a research standpoint. They're basically digitizing. These Ivy League schools are kind of working together to digitize the entire library and put it all into like a neural network kind of thing. He's working on behalf of Princeton. He works at it's the Harvey Firestone Library at Princeton, which is it's a beautiful building. Anyway, I'll shut up now. Appreciate everybody tuning in. Make sure you smash bells, maybe give us a like, a retweet, a follow, suggest it to your mom, all those things. Stick around if you want to. We'll have the party in the hotel lobby on Discord for a bonus hour of popcorn. That's a nice place to hang out when the parents aren't watching on YouTube. Hi, Mom. On behalf of the EV Mavericks DAO and the daily general discussion on our Ethereum, my name is JT. Cheers and big hugs from Kansas City.